Welcome back to episode 2 of Podcast of Whyfield. Last time we touched upon startups, different types of entities and the taxes they incur. Today we're going to look at payroll and the taxes that they incur. So we're going to be looking at PAYE, NIC and CIS taxes.
Yeah, perfect. So as Emma said, hopefully once your business is up and running and you're now thinking about maybe taking on your first employee or freelancer, it's understanding what your mandatory requirements are around that and that tax. Mm-hmm. So payroll first. Mm-hmm. So that's your traditional taking on an employee, mm-hmm. a member of the team. So if you want to go down that route, you need to set up as an employer. So in order to do that for HMRC, you need to notify them of when you're intending to start paying that person. Mm-hmm. How many people you're going to pay, the frequency you're going to be paying them, so they can give you an employer reference number. So that is stage 1, letting HMRC know. Of course, if you have an accountant, they can help you with this process and do this for you. Otherwise, you can do it through the HMRC website. From there, you're going to get 2 reference numbers from them, an employer reference number and a PAYE office reference number. And you're going to need both of those in order to submit the wages every single month, every single week. So that's kind of the setup, and then you're ready. Of course, you're going to need to understand the information from your employee, maybe even go out and recruit them and find them and gather all of their sort of personal details. So we're talking about their national insurance numbers, date of births, their agreed salaries, and when they're going to be working and the type of role that they're going to be doing.
Oh, another point to add on to that actually is you need to look into getting a good contract between yourself and your employee. Both for safety for yourself and the employee, obviously when it comes to sickness and things like that, and annual leave, making sure that you're following legislation. Both cloud softwares that we mentioned in our first podcast, they do offer payroll options. So this is something that you can do yourself. You can have it all set up there and it is just automatically sort of done. You just got to press that final button at the end of the month. And what else?
The first thing to think of, so you've got your employee, they've worked for you for maybe that first week, that first month, they've done the hours, you're all set up as an employer, you've got your software, you've got your contracts in place and you're ready to pay them. So it's either processing it through that payroll and following the steps, or asking your accountant to process it for you, just to make sure that you've met minimum wage requirements, you've got them set up on a pension scheme. So we have auto enrolment for pensions now, so which is a mandatory requirement for all employers. So you can make sure you've got that scheme set up. Ensuring the right tax code has been applied, student loan deductions, that they're on the right national insurance category. So again, these are things you can do yourself, but having the support of a payroll provider or an accountant is going to just make sure that you're ticking all of those boxes as you should. So hours go into the payroll software, all the calculations are done, and you've got a wage slip to give your first employee for their first payday. So we find that lots of our clients find that quite a big milestone and quite a big thing to have done.
Big responsibility, isn't it?
It is huge responsibility. And not only have they created a business that they can sustain themselves and their own income, they can actually sustain and providing for another person and
somebody
their
else
family.
is going to be paying their mortgage with this and feeding their families with this money.
Exactly.
It's a huge responsibility.
It is a huge step. So one that we don't take lightly, and we really do try to support our clients as much as we can. So, and then you just make the payments. You make payment to the employee of their net wages, so what it is that they're owed once all the calculations have been done. And then quite likely you're going to have a little bit that's going to need to go to HMRC, which will be their tax, their NIC deductions, student loan deductions, and something to go to the pension provider as well. But again, we can help with all of that, make sure it's calculated correctly and they're paid.
Most pensions are obviously set up by a direct debit as well. So as soon as that pension submission has gone through, they'll just take that in within sort of 10 days or so. And just the PAYE, it's just a bank transfer. So it's nice and easy, and it can be done at the same time as the net wages. Like it's just literally logging in, setting up a payment, and it's done.
Yeah, and those automatic things that you're talking about, it's called RTI, so real-time information. And it came in a few years ago with HMRC, where it was, instead of year-end reporting about what employees have been paid every single month, it's now done on the payday. So HMRC know what that person's been paid every single time you pay them. So that's a requirement as well when you take someone on board, is making sure that you're giving those submissions to HMRC so that you're compliant for their RTI as well.
And the scenario that we've just touched upon is based on a very simple one-man payroll, just at a monthly salary, no complexities within it. But there are other things to consider, such as hourly, apprentices, holiday pay, statutory pay, all of those things to think about as well. So it might not always be quite so straightforward, but it is, once you break it down, it'll be nice and simple and it's fine.
And the process is the same.
Yeah.
So you've just got to consider for each employee, their scenario and their individual situation every single time you pay them. So as you said, statutory, you might have somebody that's off sick, you might have somebody that's on parental leave, and you have to deal with those in a certain way. And HMRC have very clear guidance on what needs to be done and what you need to pay them and how you need to report it. In terms of costs for the employer, so aside from a processing cost, if you use a payroll provider or an accountant, you're going to have employers' national insurance and you're going to have your pension auto-enrollment. So it's not just the salary that costs the business. You've got some additional costs on top that you've got to think about. If you're employing more than one person, however, there's a really great allowance in the moment that HMRC have called the Employers NI allowance. And that's the first £5,000 of Employers NI that you would owe on your employees' wages is free, effectively. You don't need to pay it if you're a small employer. And that covers most small and medium-sized enterprises that get that. So
it's a really great scheme, that one.
It is. And it's one that can be missed if you're not looking out for it, if you're not making sure that those boxes are ticked, that you're not telling HMRC that you're eligible. So you could be missing out on up to £5,000 of tax relief straight away. So it's really, really important.
Huge, yeah.
And I guess then, so that's your employees. Other things you could have is freelancers. And we see this a lot in the construction scheme. And you touched on CIS earlier, which is the construction industry scheme. And they have their own set of rules, don't they?
Yes, no, you're right. And contractors are acting effectively as employers. So they're providing subcontractors the work, but subcontractors can sort of charge what they like within reason. It'd be discussed prior, and they don't have a set time they have to turn up or how many hours they have to do. They can work for other contractors as well. They are self-employed, they are freelancers. And with them not being on an employment scheme, this obviously can then lead to no tax being paid on the income.
And at the end of the year, they end up with a huge tax bill based on all of those earnings. So that's what the CIS scheme's for.
Yes, exactly. So contractors, if it falls under the construction scheme industry, contractors are liable to deduct 20% based on what they're registered. This could be gross, or 20% or even 30%, but we can go into that another time. Don't want to delve into it too much now. But they are liable to deduct 20% from all their subcontractors.
And that's at source off of that invoice, isn't it, at the time? So the subbie does the work, puts the invoice in, and the contractor takes that amount, that percentage off and pays it over to HMRC on their behalf.
And this deadline is the same as the payroll month, like the standard payroll month. And the subcontractor gets a payment certificate at the end of every month to say what their gross was, what their net was, and how much CIS they've been deducted. And that gets put on their tax return for their personal self-assessment, which then will come off of their tax liability.
So they're effectively paying on account, aren't they?
Yes, yeah. And it's so much easier to have it deducted at source and pay it straight over rather than have a whopping great big tax bill at the end of the year. So, and some people actually find they might be in a refund position. So
yeah, absolutely, because you're having 20% taken off all of your income without that personal allowance. We've not even touched on personal allowance yet, so maybe now's a good time, is that everybody can earn a certain amount of wages before they pay any tax, or a certain amount of income. It's not even a salary. So that can be income from investments, income from dividends, and before they hit that tax bracket. And that changes each year. If you're like us and you watch the budget, then you know what that threshold is. But it's around 12,500 at the moment, which means that nobody's paying any tax until they hit that threshold. So if you imagine a subcontractor earning £30,000, they've had tax taken off that whole 30,000, whereas actually the first 12.5 should have been tax free. So it's in their interest to keep on top of their books, to be knowing what they're invoicing out, knowing the tax they've had off of them, so they can potentially make that refund at the end of the year. And that's something we get involved with a lot, don't we? We have a lot of subcontractors.
Most of my clients are contractors or subcontractors. Quite often both ways, actually, So we have a huge amount of.
And for the contractor, they're going to deduct that CIS off of the subcontractor, and they're going to pay that over with any PAYE from their employees, because quite often like a building firm, for example, might have both. They might be subject to both. So they might have staff that they employ within their office, and then they might have subcontractors, and all that needs pulling in together to one payment, making over to HMRC. So you can see already how this layers up quite quickly from your one-man band employing one person on a salary to
so
somebody,
all these different bits
who's
to
got
drive
people on
different
hourly
places.
and within other schemes.
Because on the flip side of that, the contractor might have subbies, but they might also be a subcontractor themselves. So they will have suffered their CIS, and that needs to be included on their return to say that they've had that much deducted from them.
That's a great point, because actually that will then
lessen your liability for the month. So that's a really important one to make sure that's
And I feel like we really are labouring that point about how complex this can get. It's not, and it is complex. It's not complicated. There's just a lot of layers. There's a lot of things to ensure you're getting right with when you're taking on members of staff, to ensure that you're paying them in the right way, at the right rates, at the right time, that HMRC are getting what they need, and it's all being reported in the right way. So again,
following the guidelines.
So we've covered off the compliance side of being an employer, but it'd be really nice to kind of talk a little bit about the other side of actually employing people within your business and what that might mean. From a person-to-person, a people perspective, well-being, looking after your team, and making sure that actually what you're providing them is not only a wage, but a safe place to work. It's something that's really sits at the heart and the core values of Whyfield, and something that I'm really, really passionate about. And we've done lots of initiatives ourselves around, for example, our 4-day working week that we have, and wellbeing hours and team building. And I'd love you just to explain a little bit about what that means from an employee version. Not that I've made you say this, but just what it means to work in an environment like that.
No, of course. I think it's so important to have the good work lifestyle balance. And I think you really need to be happy within your career and with your employer to be able to be the best version of yourself at your job, to be most productive and things like that. And Whyfield, I could probably speak for all of us. We've definitely found that at Whyfield. The 4-day work week, not that it's just about that, but
it helps.
Obviously a huge benefit. I think just having that extra time to get any life admin and things done that you need to do, it alleviates so much stress on your own personal life. That means that you can bring a better version of yourself to your desk. Super important.
And it's something that we talked about a lot. We talked about it as a team, rather than it just being a decision that was made at the top and fed down about where can we take the positives. And it actually came out of the pandemic, and I know people are sick to death of hearing about COVID, but actually we tried to take the positives of what came out of that and how as employers we could be better and what it taught us. And there are lots of different ways that businesses are doing that. So they're looking at hybrid working, and they're looking remote working, reduced hours.
Things have changed since COVID, people's way of working. And I think a lot of employers have realised that they can save so much money in rental costs by giving their employees, a computer and a desk at home. It eliminates travel for them, and that cost that incurs as well.
Exactly.
So it's a new way forward, isn't it?
Yeah, it is. So I think while we're talking a lot around the tax on being an employer, what mandatory requirements you have in terms of making sure that you're paying people the right amounts and that everything is done from a compliance level, there's a much deeper level as an employer. And I think in further podcasts, it's something that we will definitely dig into with the team. So it's something we talk about a lot on the national stage as well. And people are really interested in hearing about.
It's not just about the salary, it's the support, it's the environment that you're in, all the added extras that are hugely important.
So it's not just tax.
It's not just tax. And bringing it back to employers' side of things, obviously there are more costs that are incurred, just the salary, which is obviously the employer's NI and the pensions, as we spoke about before. However, these are all allowable expenses for your corporation tax if you're a limited company. So all the costs are put into your profit and loss, which reduces your net profit.
And it's the same for a sole trader as well, isn't it? So you get that benefit if you're an employer.
And that would reduce your personal tax rather than your corporation tax. But they're all allowable costs. So one of the things that we advise all directors is to take your 12,570 as a salary, because that will then hit your profit and loss, and it will reduce your net profit and your taxes.
Yeah. That personal allowance is on a use it or lose it basis, isn't it?
Yeah.
So if you don't use it this year, you can't roll it forward.
Yeah, exactly.
And again, it goes back to having those regular conversations that we discussed in the first podcast with your accountant, and making sure that you're proactive and not reactive.
Yeah.
And maximising the tax savings you can make. I guess as well, when people take on employees, they worry about being able to afford that salary. It's a huge responsibility. We spoke about how empowering it can be to take somebody on and be supporting them, but it's also a huge responsibility to know that you've got to earn not only enough money to cover whatever wages you might need, but enough to cover somebody else's wages. And that's where things like cash flow planning, strategy, forecasting come into their own. And something that we do with our clients as well. So we would have a little look at what contracts have you got coming up? What's your regular work? What work do you have on retainer? What income do you know you've got? What's your break-even point? And all of those more strategic
questions.
Exactly.
But you kind of need to know for
being able to know. It's the same as if not just employing somebody, if you were going to look at renting a premises, buying a new piece of machinery, taking on a finance agreement, it's planning. How does this look, and what are the commitments that I'm making by making this choice? And again, it's talking to your accountant, it's having that knowledge, that real-time information from a cloud software or working with need to really be in touch
with the now. You don't want to wait until you get to your next tax return or your next set of year-end accounts to then look at that and go, if that might not have been, that might have been a wise decision.
Or get to a point where you can't afford it and you've already made the commitment. So again, planning, that comes, I think, to the core of a lot of our conversations will be around that planning piece and just sitting down and saying, well, what does this look like? Because revenue is fantastic and there's lots of sayings around profit being sanity. So revenue, vanity, profit, sanity. And I think that, but cash is king, and cash in the bank and being able to afford your commitments as a business really is one of the fundamentals. And as your business expands and you look at going over the VAT threshold, employing members of staff, having premises, you've got to think about how you're going to afford this.
The liabilities that
and
are coming
what
with
happens if. And again, I think we said this in the first one about not being the Grim Reaper and being negative, but it's maybe your accountant can be that critical friend and say, okay, so say you lose this key contract, what's going to happen then? What are you going to be able to afford? And have the uncomfortable conversations before they have to happen and while you've still got the time to make decisions and before you commit.
It also just ensures their security and knowing that nothing bad is ever going to happen. You know, you just need that holding hand sometimes and the direction. Almost.
And we can't see the future. We absolutely can't. I mean, if we'd have sat here in February 2020, who would have known in 4 weeks' time we were going to be in a national lockdown? But what you can do is look at trends. And again, having some cloud software, you can look back over trends, which allows you to predict forward a lot easier. So I think that it's oversight, it's having information, it's having it real-time information, it's being ahead of the game and having those conversations with somebody who understands your business and wants it to succeed.
Yeah, absolutely. And our strapline is #NoOrdinaryAccountant, and we really like to pride ourselves on the service that we provide. We're not interested in not speaking to you for a year, just a ticking box exercise.
Shoebox of receipts, doing a tax return.
Not really being in tune with the business or how it's doing. You know, we want to provide that extra bit of service for you, the extra reports so that you
be there every step of the way.
Yeah, and to really help that business grow and succeed.
Yeah. And each choice you make, whether it's going to be the right choice, we're there to be a sounding board, to offer advice, or just listen. Listen to where your business is going to go next. We are genuinely interested.
Yes, we are invested. Yeah. Number one cheerleaders.
Yeah, absolutely. Financial cheerleaders, I think, is a brilliant term for what we try to be for our clients because we want them to be successful. Yeah. And their success reflects on us and therefore and our success. Yeah. So I think, hopefully this rounds up podcast 2 and what we can provide. We've touched on payroll, a little bit more about being an employer and what that looks like at Whyfield. And join us for podcast 3 and who knows what we'll be sharing next.